reporting on the Hill. Joining us this morning to talk about some of the issues at play ahead of it is SEC Commissioner Hester Peirce. Madam Commissioner, thank you so much for your time. It's great to see you.
Thanks, Carl. It's great to be here.
A lot of suggestions, policy suggestions headed the SEC's way lately, and I'm told you're open-minded to many of them. Can you give us a sense as to how you're thinking about settlement cycles, margin requirements, investor protection, and whether or not you see any of those particularly as low-hanging fruit?
Sure. Well, I think as an initial matter, it's important to remember that the markets worked extraordinarily well under extreme volatility and high trading volumes. And so that's a positive for the plumbing piece of it. And we don't want to do anything that would make that not work as well. So we need to be careful no matter what we do. A lot of people have been talking about shortening the settlement cycle, and I think there's a lot to argue in favor of that, but we also have to be careful to look at what the costs and benefits are of the move. There may be lower hanging fruit in the form of just trying to clean up and make more technologically advanced some of the back end process that goes on and once a trade is completed. So that may be an intermediate step that we could take. And I think it hasn't been that long since we went to T+2. And so we really need to be careful before we move forward with that. On other issues, we, of course, are looking at the full range of issues. This is a multi-layered problem or event. I don't know if there are problems there. So we're looking at it from a lot of different angles.
The technology, of course, has been in operation for a while now. I wonder how much of these dynamics were already becoming evident or even obvious to the SEC. Basically, how much of a catalyst do you think the GameStop episode has become?
Well, I mean, I think it's a catalyst because you have everyday people talking about settlement cycle. The question of how long the settlement cycle should be has been one that people have been talking about for over 20 years. And so now when you have everyday people talking about it, it's much more likely to catalyze us to look at it again. But again, it's a pretty technically daunting task to change the settlement cycle. So it's something that we would have to do with a lot of deliberation.
Commissioner Peirce, there's a story in the Wall Street Journal this morning citing people familiar with the matter, but they say that the whole GameStop frenzy has prompted the SEC to weigh some more short sale transparency. Can you share any color on that front? What does transparency mean with regard to short sale, disclosures? Is it individual firms? Is it just a total short sell as a percentage of float? What types of things might you be looking at here?
Well, I should emphasize that I'm speaking for myself, and the chairman sets the agenda. So I don't know what's on the current chair's agenda, or assuming that Gensler gets confirmed to be the chairman, what would be on his agenda. A lot of people for a long time have asked for more transparency around shorts. And again, I mean, I have to sound a note of caution. Transparency is important. It's good to know what the short interest is. And certainly for us as regulators, we want to know those things. But short selling plays a really valuable function in the market. We have to remember that it plays a role of both ferreting out information about companies that might otherwise not come to light, and also allows for hedging so that there can be better liquidity provision. And so those are things that we have to balance when we think about transparency.
Shepard Smith here. Thanks for watching CNBC on YouTube.